What is going on, traders? Welcome back to the Traveling Trader. Hope you guys are doing well. Good to see you. In this video, we will be discussing FUBO TV stock, Lemonade stock, as well as Beam stock. And I'll be going over these charts and telling you whether they are a buy currently. Also, if you do hold these stocks, you want to watch out for what's coming up this week. We'll be going over the significant events that will take place for all three of these stocks this week. And if you're holding, you definitely want to watch out. These three stocks are in the limelight for a reason. Beam is up 370% since IPOing this year. FUBO TV is up over 215% in 3 months, and Lemonade is up 150% since IPOing this year. So let's get right into it. But before I get into it, as you know, if you get anything out of this video, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know which one of these stocks you're playing or currently are eyeing. And if you're wondering what happened to my face, follow me on IG stories or on YouTube stories. Let's get right into it. All right, guys, so I'm gonna have timestamps and chapters, but we'll start off with FUBO TV, and then we'll go to Lemonade, and then we'll go to Beam. But like I said, there are some very important milestones or some very important events this week that you will want to pay attention to, especially if you're holding these stocks. So let's get right into it. FUBO TV, as you can see here, it IPO'd on October 1st through a merger with FaceBank. And like I said, it's up an insane amount in the last 3 months. It basically 4x'd its money, going from $10 to now $44. It hit a high of almost $60 or just past $60 actually, and we are now seeing a retracement. Now here's the important thing to pay attention to, a few things. So looking at its shares float, FUBO has 55.3 million shares float. That means that is the shares that are available to trade. However, if we take a look at upcoming events, you'll see that FUBO TV on December 30th, which is a Wednesday, they have a lockup expiration coming up of 5.6 million shares. So if we look at their shares float, it is, 55.36 million. So almost 10% additional shares will be available to trade. Now, as you guys know, like on recent offerings from Neo or XPeng, that this will automatically devalue or dilute the shares available. But it's a little bit worse than that, because these 5.6 million shares that I just talked about, these are actually unlocking on December 30th. They were part of the IPO lockup. Investors were not able to trade these until the lockup expiration, which is happening, as I said, on December 30th. So they will be able to sell these shares for whatever the market value is at the time. And like I said, with FUBO, this stock basically 4x'd, right? It was trading at just under $10, and now it is $44. So if it stays around here, we can at least assume that some original investors will want to take profit. Moreover, FUBO is one of the most shorted stocks right now. Its short float is almost 40%. That means 40% of the shares that are part of the float that are available are short. Now, this could create an interesting short squeeze in the interim, but the shares float plus the lockup expiration, I'll be very curious to see how this head-to-head plays out. And if we take a look at FUBO's open interest on the options market for January 15th, which is the next available expiration after lockup, there is a ton of short buildup. There are so many puts that have been opened, like the $65 put has a 400% open interest increase. That means traders have opened up 400% more put contracts at $65, betting that FUBO will be below $65 by expiration. And even on the call side, yes, we have an increase in open interest, but with an elevated implied volatility, you can almost bet or be rest assured that these are calls that traders are selling. They're selling calls. And if you know anything about options, you know selling calls is actually bearish. So these option traders are selling these calls into high implied volatility situations because it is lucrative. When implied volatility is high, options prices are higher. So traders are more incentivized to sell calls during that time. Now, I am bullish on FUBO TV in the long term. If you guys don't know what it is basically an OTT TV service that is primarily focused on sports. And as you know, sports are one of the most expensive packages when it comes to TV services. If you have DirecTV or whatever, and you try to add on sports to that, whether it's the NFL package or the NBA package, that is usually a very expensive add-on. So FUBO TV is cornering that segment of the market. It's a really good idea. So I am bullish on it in the short term, in the long term, but I do want to see what happens in the short term. For that reason, I would not buy FUBO TV until it at least retests the 21 EMA here, which currently is about $35. You could see that the major indicators are also pointing downwards, whether it's the stochastic RSI, the RSI, or the accumulation distribution line. And if you hold a lot of FUBO stock, I would really watch out this week for that lockup expiration on December 30th. Whether you set a stop loss, sell some of your shares, hold on to the rest, or whatever, it's your choice. I'm just putting it on your radar. So in conclusion, if you're not in FUBO yet, I personally wouldn't buy here. I would wait for that lockup expiration and I would buy into weakness. So as soon as we see potentially millions of shares dumped, as soon as we see panic selling from that, I would definitely buy into it, especially because of that potential short squeeze here, with the short float being at almost 40%. All right, stock number 2, let us talk about Lemonade. Now, this one is in probably a more precarious position than any of the 3 stocks that we're going to talk about today. Now, just like FUBO TV, Lemonade also has a lockup period coming up this week. This is on Tuesday, but this is even more dire because they are unlocking 11 million shares. And if we take a look at their current float, they are currently at 37.3 million. So almost 30% more shares will be hitting the market this week. Again, not only will this potentially dilute its current float, but original investors will be able to cash out potentially at above $120 if it stays there by Tuesday. Now, moreover, from a valuation standpoint, the outlook on Lemonade is so mixed, with ratings from very bearish to very bullish. Now, depending on where you look, Lemonade can either look like a great growth opportunity. If you look at its revenue per year, you could see that it's steadily increasing, estimating revenue next year of $110 million. If you look at its earnings per share, it just looks atrocious. It's in the negatives, obviously, but we do see that with companies that are trying to grow. However, here's what scares me about Lemonade being an insurance company. If you're an insurance company, you need a lot of money on the side in order to cover potential claims. For Q3, Lemonade just booked $10.5 million of net earned premiums for an annualized price to premium multiple of 143x. Progressive, which is a huge insurance company, not entirely in the same market niche, but still in the realm of insurance, trades at 1.4x its annualized Q3 net earned premium, so 100 times less inflated. For me, I fall squarely in the middle. I'm not overly bullish on Lemonade, but I'm not entirely bearish on it as well. I do think that it is an insurance market disruptor that does have a place, but I'm not willing to pay $125 for it. Plus, this pattern right here, this is called a bearish harami. With this 11 million share lockup period expiration coming up on December 29th, I would be very careful with what happens to Lemonade if you hold it. And as an observer, I don't mind at all waiting for the price to drop. Like I said, stocks will always retrace to their major moving averages. So in my view, I would not buy Lemonade here, but there is a huge opportunity if Lemonade does see a major retracement. And if we take a look again at the open interest on Lemonade, you'll see a ton of short buildup for the January 15th contracts. Look at the $130 puts, meaning that you're betting that Lemonade will be below $130. An increase of 5,275% in open interest. So I would be very wary of Lemonade if you currently hold it. If you're not holding it, for me, I would wait for a drop where likely at this support level here between, I would say, $85 and $97. Anywhere between $85 and $97, I'd be willing to make a first entry on Lemonade. That represents a drop in terms of percentage from current price of 22% and more. The 11 million shares definitely puts me off because, again, that's 30% of its current float. Now, I have an insane trade idea on Lemonade that will cost us very little, but could net 6 to 7x our money if Lemonade does see a drop after that lockup expiration. So stay with me. This is an options play. And by the way, I'm releasing an options course, as most of you know. And if you want early bird access that will give you a fat discount, link is in the pinned comment section below. So sign up. All you have to do is put your email in there. And if you are on my list, I will give you a lucrative discount on my options course, where I will discuss strategies like this, as well as all the other strategies you ever wanted to know. And if you want access to our private trading group where I send all of my trades, link is in the description below. So here's what I would do on Lemonade. I would actually do something like a put calendar spread, which would cost us very little, but like I said, could be extremely lucrative if we do see that drop in Lemonade. I would basically sell the December 31st 85 put, and I would buy the January 15th 85 put. So this is actually a put calendar spread. So this would cost us currently 95 cents or $95 because we have to multiply it by 100. And if we take a look at what this profile looks like on a graph, we can only lose $95, which would be our max loss if Lemonade just stays stagnant or actually increases. But if it does decrease like we want it to, as long as we get close, the closer we get to $85, the more money we make. So max profit on this would be $714 for a $95 investment or $95 commitment. This is not really an investment. This is more of a trade. So if we can get to $85 or close to that, and the closer that we get to that, the more money we make. Obviously, we don't need to get to 85. Like if Lemonade just gets to $100 by expiration, we make $230 for a $95 capital commitment. And that is profit, by the way, not $230 including what we paid. That is profit on top of what we paid. So as you could see with this calendar spread, the closer that we get to $85 by the December 31st expiration, the better we are. And it's not going to cost us a lot. So I'm definitely interested in this trade here. We'll likely open it up Monday. We'll likely send it out in the trade alerts if I do. So you definitely want to be a part of that. Again, sign up. Link is in the description. All right, stock number 3 is Beam or Beam Therapeutics. This stock actually had a monster session since IPOing, gaining about 370%. Now, Beam Therapeutics is a biotech company that engages in developing precision genetic medicine, usually from patients suffering from things like sickle cell disease, etc. I'm not a doctor. I just read what's on Seeking Alpha. So Beam also has a lockup period that expires on December 30th for a block of their shares. Now, I can't actually find any information about how many shares they are going to unlock, but I do know that the last time they did this was around August 4th. And if we take a look at what happened on August 4th, leading up to the lockup period, we saw a tanking from $30 all the way down to $18. But on the day of August 4th, it was pretty neutral. And then the day after the lockup period, we saw almost a 10% increase followed by a 15% increase. However, I do believe that the price that it was on August 4th has a lot to do with the action that we saw because it IPO'd at $23. So on the lockup expiration, when it was trading at $19, there was really little incentive for the original investors to sell. However, in this case, Beam is currently trading at above $87. So if it stays around here, there could be an incentive to see a sell-off. Now, again, I don't know how many shares of the current float are being unlocked on December 30th, and that information would help. So I can't make a determination on that front. However, I do see bearish divergence between the price, between the stochastic RSI, and between the RSI itself. This is called bearish divergence, when the price is continuing higher, making higher highs, and the oscillators or indicators are making lower highs. You also see the volume trending down, which is something you don't want to see as the price is increasing. So that leads me to believe that a lot of traders and investors are waiting for a potential price drop on Beam leading up to the lockup expiration. Now, in my view, Beam has just run up too much for my liking. I think it is currently overvalued based on what it is doing. Just recently on October, it issued 5 million shares at $23.50, and that wasn't that long ago, and it's currently trading above 87. Now, I will entertain a trade if we do see some support at the 21 EMA. That is currently at around $71, $72. I will entertain a short-term trade because we could set our stop limit very close to our entry here. So I will entertain a trade if I do see it finding support here. Otherwise, I would wait on Beam. I would wait for a major retracement to maybe the 50 moving average or the 100 moving average before entering. And I definitely want to see what is going to go on with the lockup expiration. Again, I have no information on the number of shares. Also, if you look at FinViz, they have a pretty cool feature where if you're not very familiar with patterns and whatnot, they will from time to time recognize certain patterns for you if they do arise on the chart. And you could see this trend line here that they drew, which is showing some resistance at this level, at this trend line level. Now, I do think with continuing positive news catalysts, Beam does have a future, a long-term future, in the same way that CRISPR does, right? CRISPR, the gene editing biotech company, but currently it's just too high. Even if you compare it to CRISPR, you look at the price to sales ratio of CRISPR, it's at almost 160%. The price to book ratio is 8.8. If you look at Beam's, its price to sales ratio is just something that you can't even interpret. It's 218,940 41. It doesn't even have positive ROI. At least CRISPR does have positive ROI at almost 5%. So I do think currently it is overvalued. It's also, the market cap is 5.25 billion, whereas CRISPR's is 12.3 billion. And CRISPR's been around for a lot longer. And like I said, it does have positive ROI. So for me, Beam is just a wait and see here. I'm not doing any plays on it until I see a major retracement. Anyway, that is it for this video. If you got anything out of this video, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know which one of these you are trading or currently holding. Again, I would just watch out for those catalysts. And if you want to know what happened to my ugly face, watch my YouTube stories or Instagram stories. If you want access to all of my trades and portfolios, link is in the description below. Sign up if you want early bird access for the options course. Stay safe out there, traders. Oh, subscribe to the channel. Hit that notification bell. Stay safe out there, traders. Peace.